Hello everyone and welcome back to Senior Benefit Insider, your most trusted source for verified news, financial updates, and policy changes affecting American retirees and seniors. If you or a loved one rely on Social Security, Supplemental Security Income, or Medicare, higher. Today's video is one you need to watch from start to finish. There are major shifts happening right now, and understanding these updates is critical for managing your household budget, healthcare costs, and overall financial security. Over the past few weeks, our research team has been closely analyzing the official data released by the Social Security Administration and the Centers for Medicare and Medicaid Services. We know how much misinformation is floating around the internet right now. Everywhere you look, sensational headlines are making wild claims about massive bonus checks or sudden benefit cuts. Our goal today is to cut through all of that noise, drop the clickbait, and give you the raw, unvarnished facts straight from official federal guidelines. Specifically, we are going to break down 4 major developments. First, the official implementation of the 2.8% cost of living adjustment, commonly known as COLA, and what it actually means for your monthly deposit amount. Second, the average dollar amount changes for retired workers, disabled individuals, and surviving spouses. Third, the hidden factor that many people forget to calculate, the rise in Medicare Part premiums and how it eats into your net raise. And fourth, important earning limits and tax rules that you need to be aware of if you are continuing to work past retirement age. So grab a cup of coffee, settle in, and let's dive right into the verified facts to protect your hard-earned benefits. Let's start with the biggest financial update affecting roughly 75 million Americans. The cost of living adjustment, according to the official announcement from the Social Security Administration, the COLA for beneficiaries is set at 2.8%. Now, where does this number come from? Many people think it is pulled out of a hat by government officials, but it is actually calculated using a strict automated formula based on the Consumer Price Index for urban wage earners and clerical workers, compiled by the Bureau of Labor Statistics. When inflation rises, the index reflects those higher costs of living, spanning everything from groceries and housing to energy and medical care, and the formula adjusts benefits upward to help retirees keep pace. To put this into perspective, a 2.8% increase is a modest bump compared to the historic spikes we saw a couple of years ago during peak inflation, but it is slightly higher than the previous year's adjustment of 2.5%. When do these changes take effect? For the nearly 71 million Social Security beneficiaries, the 2.8% increase begins with the benefits payable in January. However, if you receive Supplemental Security Income, commonly known as SSI, your first boosted payment actually rolls out slightly earlier, specifically on December 31st. Because the standard payment date falls on a federal holiday, let's talk numbers, because percentages are helpful, but dollars and cents are what pay the grocery bill. Based on SSA estimates, the average monthly retirement benefit for a retired worker is increasing from $2,015 up to $2,071. That translates to an estimated average monthly increase of about $56. For age couples where both spouses are receiving benefits, the average monthly payment moves from $3,100.20, which is an increase of roughly $88. If you are a widowed spouse receiving survivor benefits, your average monthly check moves from $1,860.19, giving you an extra $52 a month. And for disabled workers relying on SSDI, the average monthly benefit rises from $1,500 to $630. Now it is vital to remember one golden rule of Social Security. These are national averages. Your individual increase depends entirely on your own earnings history and the baseline amount of your current monthly benefit. If your current benefit is higher than the national average, your 2.8% raise will translate to a larger dollar amount. If your benefit is lower, your dollar increase will be scaled accordingly. To see your exact personalized new amount down to the penny, the most secure and accurate way is to log into your official My Social Security online account, where your personalized CORA notice is made available in the Message Center. Now, while a $56 average monthly increase sounds welcoming on paper, we have to look at the other side of the ledger. This brings us to a crucial topic that many news outlets skip over, but one that every senior must understand: the net gain versus gross gain reality. Whenever Social Security announces a COLA increase, another federal agency, the Centers for Medicare and Medicaid Services, announces adjustments to healthcare costs. For most Medicare enrollees, the standard monthly premium for Medicare Part B, which covers essential doctor visits, outpatient services, and certain medical supplies, is rising. The standard monthly Part B premium climbs to $202.90, up from the previous year's rate of $185. That represents a significant percentage increase in out-of-pocket medical expenses. Why does this matter so much to your Social Security check? Because for the vast majority of retirees, Medicare Part B premiums are automatically deducted directly from their monthly Social Security benefit before the money ever hits their bank account. Let's do the math together so you can see how this impacts your actual pocketbook. Higher. Take the average monthly retirement benefit increase of $56. Now subtract the increase in the Medicare Part B premium, which is going up by about $17.90 per month. When you subtract that healthcare increase from your COLA raise, higher, your actual net monthly increase drops from $56 down to roughly $38.10. This means that nearly 32% of the average retiree's COLA raise is immediately absorbed by higher medical costs. Higher. This is precisely why older advocacy groups like the Senior Citizens League frequently point out that official COLA metrics sometimes fall short of capturing the true inflation pressures faced by seniors. Higher, particularly when healthcare and prescription drug costs outpace general consumer goods. Higher. If you are a higher income beneficiary, meaning your individual modified adjusted gross income exceeds specific thresholds, your Medicare Part B and Part D premiums may be even higher due to income-related monthly adjustment amounts, or IRMA. Higher. Always review your annual Medicare statement carefully so you aren't surprised by the net deposit amount appearing in your account. Let's transition now to another group of viewers. Seniors who are past full retirement age, higher, or those who are choosing to continue working part-time or full-time while collecting benefits. Many people do not realize that if you claim Social Security before reaching your full retirement age, higher, there are strict limits on how much money you can earn from a job before the government temporarily withholds a portion of your benefits. Let's break down the official 2026 limits straight from the Social Security Administration rulebook. First, higher. If you are younger than your full retirement age for the entire year of 2026, the annual earnings limit is set at $24,480, which breaks down to about $2,040 per month. If you earn more than this threshold, higher. The SSA deducts $1 from your benefits for every $2 you earn above that $24,480 limit. Second, what if you are reaching your full retirement age in 2026? The rules become more lenient. Higher. The earnings limit for the months leading up to the exact month you attain full retirement age increases to $65,160, roughly $5,180 per month. For every $3 you earn over this limit during those specific months, $1 is withheld. Higher. Once you officially cross the threshold into your exact month of full retirement age, this earnings test disappears entirely, and you can earn as much as you want without any benefit reductions. Furthermore, higher. Let's talk about the maximum taxable earnings limit for Social Security taxes. The maximum amount of earnings subject to the Social Security tax, known as the taxable maximum, increases to $184,500. Any earnings above this specific cap are not taxed for Social Security. Higher. On the tax front, there is also important news regarding standard deductions for older adults. For taxpayers age 65 and older, standard deductions provide additional breathing room. For example, higher, married filing jointly couples where one or both spouses are 65 or older enjoy enhanced standard deduction thresholds, helping shield more of their fixed income and retirement distributions from heavy federal taxation. Before we wrap up our detailed analysis today, higher, we need to issue a very serious warning regarding fraud and security whenever major announcements are made about Social Security updates, COLA increases, or financial relief programs. Scammers and bad actors come out of the woodwork. Higher. They target senior citizens through phone calls, text messages, and fraudulent emails pretending to be representatives from the Social Security Administration, Medicare, or the IRS. Please remember these critical safety rules. The government will never call, text, higher, or email you out of the blue demanding immediate payment, gift cards, wire transfers, or cryptocurrency to process your benefits or COLA increase. The Social Security Administration will never threaten you with arrest or legal action over the phone. Higher. Never give out your full Social Security number, bank account details, or login credentials to anyone who contacts you unsolicited. If you ever receive a suspicious communication, higher. Hang up immediately and verify the information by logging directly into your official account at ssa.gov or by calling the official Social Security customer service hotline yourself. To summarize everything we've covered today, the higher. 8% COLA increase brings a welcome average boost of around $56 a month for retirees, but higher Medicare Part B premiums will claw back a portion of that raise, reducing the net gain to roughly $38. Stay informed, review your official statements online, higher, and manage your household budget with these exact figures in mind. We hope this comprehensive fact-check breakdown helps you plan ahead with confidence. If you found value in today's deep dive video, please hit that like button. Higher. Share this video with a friend or family member who needs to hear these facts. And subscribe to Senior Benefit Insider right now so you never miss another verified financial update. Thank you so much for watching, take care of yourselves, and we will see you in the next video.